What's going on, everybody? Blake here with Trade Tracer. As always, none of this is financial advice. Trade and invest at your own risk. This week's video is going to get you prepared for this week and also going to give you a little insight as to how I'm reading this market and also how I'm trading and approaching it. So let's go ahead and get started here. We have the S&P pulled up here on a monthly time frame. So we all know that we've been in a major downtrend, 16 consecutive days of downtrend. I've been beating the table on preserving capital, and if you have year-to-date gains, if you did, must have been in those 4 short trading days when we had uptrend at the start of this year. But if you do have them, make sure you are preserving that capital in year-to-date gains for the next uptrend. As you know, we have odds in our favor when the market is trending an uptrend with momentum, and we don't have that right now. But I wanted to start on the monthly time frame to give you a bit of perspective. So this is the 10 and 50 simple day moving average that creates this cloud. So on the monthly time frame, this is a 10-month moving average at the top and a 50-month moving average on the bottom. And you can see, this dates back to really 2011 when we got that 10 through the 50 twist, and we got that nice uptrend. You can see we pulled back to this 50-month moving average a few different times, actually, if you want to count this back here, back in 2016, which has held that support. And right now, this 10-month moving average is holding that support, and this monthly candle will close on Monday. So going to be keeping a close eye on that. Want to see that hold. On the weekly time frame, very similarly, you can see the bottom of the cloud, 50-week moving average. Last week, we had a nice close back inside of that cloud after gapping below it and running lower and then reversing later in the week to close inside that 50-week moving average. But you can see momentum is dead. We have zero momentum. Momentum's actually to the downside. So if we break last week's lows, all bets are off, right? Because then you're going to be breaking below that 10-month moving average and then also the 50-week moving average with price weakness confirmation. And that's when you start to get a little defensive and start, preparing for somewhat of a, potential bear market, or at least a significant pullback like we got, back with these COVID lows. Now, by no means am I predicting that, but it's something that we have to keep an open mind to, which is why, our equity exposure in the investment portfolio is significantly decreased. And it's difficult to be into bonds as well because they're not really doing much either. So, we're hedged with our investments in the investment portfolio because you have to be prepared for a downturn. You can't just let your capital depreciate in value as the market, goes with it. You can't go down with a ship. So, our trading style, our methodology, and our approach to investing, we take these things into consideration. So if we go into a bear market, we're not going to be participating in that downside, and we'll be preserving capital. And if not, finding other areas that are, moving higher. And if we have to, maybe we'll take a small short position to hedge even a little harder. But you have to keep an open mind. You have to be open to that. We've been in a very long, prolonged bull market. By no means am I calling a top. We could absolutely reverse higher this week and go right back into uptrend. And that was just, a bump in the road. But you have to be prepared for these things. And then also on the daily time frame, you can see this past Friday, bullish engulfing candle. That's what you want to see going into this week. So, you can see we're still below the cloud. We don't have rules to even get swing long yet, which is why I've been, kind of slow on Telegram because, look, guys, you don't want to trade this. This is not where we make our money. This is not where things are easy. And nothing's ever easy in the market, but when you get an uptrend, this is much easier, right? You can get long, get paid, and stay long versus your stop in an uptrend, right? Here, you're just guessing, picking a bottom, and if you tried to trade any of this, look at this is extremely volatile, and even these sharp downward days as well. You're green on the day and then boom, reverse, right? You trying to trade this, is very, very difficult, which is why I say, take a break, take some time off. You're not missing anything. You don't have to get the bottom to make money and beat the market and be successful at trading. We're going to get our uptrends this year. It's going to take some patience. We could reverse this week. If we don't reverse, you got to be prepared for some more downside, right? So far, this is just a bear flag below a declining 10 and declining 50-day moving average. And I think we're also below the 200-day. So let's see if we're below the 200-day. Yeah, below the 200-day moving average, all right? So this is not bullish, right? We still have to be cautious. Bear flag below a 210 and 50-day moving average, that's not bullish, right? That's not where we have odds in our favor. We have odds in our favor when we bull flag above the cloud. And when we bull flag above the 50 and the 10, then we have really high odds, right? That's when you get, size swing long. You can start to nibble a little bit, if you're aggressive above the 10 SMA. If we start to bull flag, you maybe ride it to the 50 and see what happens there. But until that happens, we don't have odds in our favor. So there's no reason to be trying to trade. I know it's difficult, but patience and discipline are two of the most important factors of trading. Trading is a psychological game. So you have to be prepared for this stuff. And you got to recognize when you have odds in your favor and when you don't. And right now, we don't have odds in our favor. So to kind of sum things up, what am I looking for this week? Well, we had energy. We had energy, lead this entire way up, right? So energy was holding up the S&P. Some of these other, momentum stocks have gotten completely destroyed, down 50% or more, whereas the S&P is down, 7 to 10%. And the reason is because you have these energy names like, CVX and XOM and, all these names we've been all over that have been showing relative strength and leading the market. So I'm still bullish energy. The higher time frames still look great. Problem is now that this is such a crowded trade. Everybody's looking at energy, right? Which is one thing that concerns me, that we could maybe, pull back before another move higher. But, energy is something that we crushed. We've been all over it. And I'm going to look to see if that continues to lead this week. And if it doesn't, there's really two major names. Well, two names that we need to be watching regardless of what energy does this week, because I think it's going to show the temperament of our market. And the first one is, and this is old, excuse these are previous, entries. Anyways, Apple is one of these stocks that we need to keep a close eye on. So Apple had earnings, on Friday, gapped up above the 10 SMA and then ran above the 50. So if we get above Friday's high, I think that's a very positive sign, and be looking for Apple to lead this market as it was before. So if Apple can get back above 170.35, I might take a stab at Apple long, but you guys know I like to trade in agreement with the market. I would love to see the market above the 10 SMA as well before I do that. And then also Microsoft. These two names are going to be the names that I'm watching this week. So Microsoft as well, it's looking constructive, closing back above the 10 SMA inside the cloud. If we can get above Friday's high, I think we could possibly make a run to this 50 SMA. So Microsoft and Apple are the two names I'm definitely watching. And then Tesla as well. Tesla doesn't look healthy to me. So Tesla, I said above here could probably get to, 1,100, 1,200. It did. And then we just sold off. Don't love this pattern, but that doesn't mean Tesla can't reverse. So primary stocks I'm watching, Apple and Microsoft, and Tesla's kind of on the back burner. And I'm also looking to see what energy does this week, because S&P is looking like it wants to reverse. The NASDAQ is a little weaker, but I posted a chart on Twitter, and I also shared it with you guys. This anchored VWAP seems to be really important. So this anchored VWAP from the, I want to call it October lows of 2020. Let me see if I can get this to load more. Yeah. So the September 2020 lows for the Nasdaq. So you can see this is an area of interest here. Didn't quite come down to it here, but you can see 5 consecutive days trading at this level. Definitely an area of interest, and you can see, we've held this level fairly well. Friday pushing above it. If we can get back above the January 26th high, likely we'll be back above that 10 SMA, and I could maybe take a stab at, getting long tech. And, obviously I'm going to be looking for Apple and Microsoft to lead. So if that happens, you can take a look at that as well. But going forward this week, cautiously optimistic. We're still in a downtrend. We still have to be prepared for this more significant, deeper pullback. If Apple and Microsoft can't pull through, I don't know what's going to lead this market, because energy's, crowded trade, and then we could have another leg lower. If Microsoft and Apple step up and we see buyers rotate back into this market, I think you could see a huge rally on tech because it has been underperforming. I think you could see tech step back up to the plate and lead. And if that happens, I'll be getting long because I love when tech leads. Hopefully we can get back above the 10 SMA, and if that happens, I'm going to be a robot and get long. All right. See you guys on the open. Take care.